save taxes, but at the same time, you also grow that money that you save and invest that money in the most profitable and tax efficient manner. In today's dollar segment, in today's dollar update segment of the show, we are going to cover some changes that happened with the PPP, which started today. President Biden has changed the formula for PPP loan for sole proprietors, independent contractors, and self-employed individuals to receive more financial support. For next 2 weeks, starting from today, business owners who have employees less than 20 employees can apply for the PPP2 raw. If they have not applied earlier, they can apply now as the first draw in the PPP2. If they're less than 20 employees, the chances of getting them loans is much, much higher, and getting higher amount is much, much higher too. With these changes, the details of these changes are that it's eliminating a restriction for big business, is eliminating a restriction for small business owners who are not able to come up with a lot of payroll and using the income that they generate from the business as a basis for getting the loan. And we have seen that small business owners, doesn't make a lot of profit because of expenses or other things. They have a good revenue, but profit goes down. So this change that is going to happen starting from beginning of March, they're going to change the formula from profit-based to income-based, to gross revenue-based. That will be substantial changes. We are still waiting for the details to be given by the SBA, but that's an interesting change that we're going to see in the next week or so when you get to know more details about it, how this will be worked out. As of now, we know it's 2.5 months of the average monthly sales for that person. It allows a business owner who are delinquent on federal student loan payments from securing a PPP loan. That's also a big one. There are business owners who are defaulted or late on making the student payments. So earlier in PPP one round, they were disqualified. They're giving that option to those business owners who are defaulted or delinquent on federal student loan payment to apply for this PPP loan. And it also allows non-citizen small business owners who are lawful US residents, not citizens, US resident, to use this to get this loan by using the ITIN number, tax identification number. So that's a big one. So this is a 14-day exclusively application period for small business owners having less than 20 employees. If you are business owners who have more than 20 employees, they have to wait. They cannot just go ahead and apply starting today for next 14 days. After 14 days, they can apply. Right now, as it stands today, SB has granted about $140 billion out of a total $284 billion sanctioned for this PPP2 round. That means around 45 to 50% of the money still not given to business owners. So there's a very high chance that business owners will get this money, but you need to apply. And if you are having less than 20 employees, great opportunity for them to apply. Remember, for PPP2 loan, you have to have a substantial decrease in quarter-wise comparison of the revenues from 2019 to 2020 by 25% or more. The decrease can be in terms of receipt, which can be measured in terms of the accounting method that the company employs, the business owners employs, versus tax basis. Tax basis can be cash basis, but accounting method can be accrual basis or vice versa. It allows you to look at your bank statements. It allows you to look at your invoices and see where the drop is. It's a time for you guys, for the business owners, to connect with the CPAs and see what best can be done to get the advantage of PPP round. Any questions? This is the time to call in the studio. Studio lines are open. The studio number is 408-912-5038. 408-912-5038. If you have any questions, tax questions, you can call the studio line now. This is a time where you can interact with me, get a answer to a burning tax question that relates to capital gains, just the rental properties, the Indian stuff, foreign income reporting. By the way, we are doing a webinar, which is a very popular webinar on March 27th, Saturday. March 27th is on foreign bank account report. Foreign bank account reporting, foreign income disclosures, foreign asset disclosures, all related to foreign asset reporting and income reporting requirements. We have just finished a very powerful webinar last Saturday on 2020 tax filing tips. It was well attended by over 300 participants. And really, it was a eye-opener for a lot of people who attended that, relating to a lot of factors that are going to impact the 2020 tax filing requirements. We have a caller here. Let me take this call. Good evening. This is Sanjiv Gupta CPA.
Hi, good evening, Sanjiv ji. This is Suresh. I have a question. So, as an NRI, I don't have any income in India except that TDS on the bank fixed deposit. So, how should I proceed? I declare this income in my US tax returns, but in India tax returns, the tax consultant says like as long as it is less than 10,000, I can get it back. So, how should actually correct way is? Do I get that TDS deducted back into my refund in India tax returns?
Okay, that's a very good question. So first of all, a lot of people have invested in India in a bank FDs and CDs. So you have to first report that deposits on FBAR, which is if the balance is more than $10,000 on any day during the year. If the balance is more than $100,000, you have to report not only on FBAR, you have to also report on Form 8938. Form 8938 goes with your tax returns. FBAR is filed separately outside the tax returns. You have to report the interest income from those CD on your tax return. Now, there are various methods of reporting. You can report it on year-to-year basis on accrued interest income, or you can report the when the CD matures. Whatever money you invested and what you get back, the differential, you can report that time on your tax return. That is much better because you want to take the advantage of fluctuations in the foreign currency. So you can choose any method you want, but you have to report the interest income. You have to report the asset, the deposit on those forms. That's important. Now, if any tax has been taken out from those interest income and you're filing India tax returns and you're getting a refund of the TDS that has been deducted because your taxable income is below the taxable amount which is subject to taxes in India, like 2,50,000 rupees or 3 lakh rupees, you can get a refund from India based on filing of your tax return in India. But when it comes to US, you cannot, the tax that you have got a refund, the tax that you got deducted and the tax that you got refund, you should not be including that tax on the US tax returns because you already got a refund in India. You can't get a credit for the tax that you paid in India because you got a refund. You cannot include on the US tax return. So just be careful on that account. Just because you got a refund, you cannot include the taxes, but you still have to include the interest income on the FDs. If it's whether it's an NRA account in India, it's not taxable. If it's an NRO account in India, it's taxable, and you take out 10% TDS, 10 to 20% depending upon income levels. But here in the US, you have to report the interest income, whether it's from NRE, NRO, or any other account. And if you're not getting a refund in India, you're paying taxes, you can get a credit on the form that we use is 1116. Okay?
Okay, Sanjay. Okay, great. Thank you.
Thank you. Thank you. Really appreciate that call. And if you have any calls, you can definitely call the studio number 408-912-5038. 408-912-5038. This is the time to connect with the CPA, get your question answered. We are going to have a very good webinar coming up soon on March 27th on foreign account reporting. It's all about foreign assets, FBARs, 8938, 5171, 5172, guilty taxes, 8971. Then we have mutual funds reporting, 8621. So all those 9 years that we have with foreign income reporting and foreign asset reporting, we're going to do that. And so always have been a webinar with full capacity. So March 27th is the date from 10 to 12. It's a webinar. You can chat with me with your questions. We have this, I was talking about the webinar that happened last Saturday. Like I was saying, it was eye opener for a lot of people because a lot of things have changed in 2020. A lot of things. This year, 2020 tax filing will be one of the toughest tax filing season for a lot of people, including the tax preparers. They have to get used to the new terminologies, new changes on the tax forms, and you have to wiggle around with a lot of things that can provide benefit to a taxpayer. And if the the taxpayer or the tax preparers are not careful in doing the return properly, they will lose the benefit. They will lose the benefit. Remind you that one. They will lose it. So it's very important that you file the return with full knowledge and experience in reporting those items on the tax return. We have a caller here. Let me take this call. Good evening. This is Sanjiv Gupta CPA.
Hello, Mr. Sanjiv. My name is Adi, and I'm calling from the Bay Area.
Adi, how are you?
I have a question. I worked in an organization last year, and luckily the organization got acquired, which means that I made a windfall, and I was given some RSUs. And but what happened was the RSUs, they did some tax deduction in the RSUs, so that I get only the tax deducted part of the windfall. And I was wondering how I should proceed with my tax filing for this year.
Very good question. And this is a normal scenario that happened. One of the scenarios that happened in 2020 is mergers, acquisitions, and also a lot of companies went IPOs. So there's issues on how to treat those items, those gains that happened on your tax return. So in your case, you have this money that is coming to you because of acquisition. So of course you have when one company acquires another company, they acquire your stocks, and you have your stock options was acquired, and this windfall gain. Of course, they will take out the taxes on on certain amount. Like they will not be taking full tax, like 30% to 40% depend. They will take a 20 to 25% of taxes, federal and the state. Also, they may or may not take depending upon how they have taken care of your individual state tax requirements. But in most cases, I've seen they have they never took out the states. So in your case, it's better that you file your return as soon as possible, because I know for sure that is one of the reasons why I said this year will be a typical year for tax filing, because the withholding will be very, very bad. So you definitely have to compute your taxes. You can use estimated calculators. But if your taxes are falling short by more than 20% of what you've paid so far, you naturally have to go and get those things, get the return filed and make the payment as soon as possible. Otherwise, there's a penalty interest of at least 2% to 3%, including the federal and the state, depending upon the tax due, and can go up to 25% of tax due. So the withholding of taxes is an important element that was not done properly, whether it's a RSU acquisition or in case of unemployment compensation or incomes of stimulus payments. With, of course, it's tax free, but it adds to the income. So all these things are important calculations. So I will suggest to you to look at your total taxable income for the year, do estimation. There are several calculators you can do. Look into that, and if you owe taxes more than 20% of what you have paid, go ahead and file your return with the tax payments to avoid any penalties and interest that will accumulate every month, at least 1% or 2%, depending upon how big the tax due is there. Okay.
Okay, and this interest accumulation or the penalty you were talking about, does it start from the April 1st date, or does it start right away?
That's a good question, because a lot of people are always under the confusion that the penalty and interest start from April 15. No, no. The penalty and acquisition start. There are two things to remember about penalty interest. First is penalty and interest for underpayment of taxes. That underpayment means underestimation. You need to pay in 4 equal installment. If you're not done, there might be some penalty there. Second penalty is need to pay. You need to do the catch up uh, uh, of tax payments by January 15. So if you've not done the catch up by January 15, 90% to 100% of your tax due, then it starts from, the meter starts running from January 1st, January 15th onwards, not April 15th. So that's why I was saying, just look at your estimated tax due and go ahead and file the return as soon as possible. Otherwise, you're going to end up paying a lot of penalties and interest. That's going to happen in most cases during this tax filing year. Okay.
Okay, thanks a lot. That's great advice. Thank you.
Thank you. Thank you. Really appreciate for the call. Another caller here. Let me take this call. Good evening. This is Sanjiv Gupta CPA.
Hello, Sanjeev ji. I had a question regarding, I know you cannot give any advice and all, but just is a question I had, if you can answer, is what is the good products which we should use for the kids' education saving? Meaning 529 is also on the table, but is there anything else which is available under the IRS rules which we can invest in to save for kids' education in college?
So when it comes to kids education, the first thing and foremost thing which I always tell my clients is to look at the possibility of investing into non-deductible IRA. We call it a backdoor Roth. You can put $6,000 for yourself and $6,000 for your spouse, as long as you don't have any Roth IRA contribution. So you can do a backdoor Roth. So you have $12,000 you can invest into Roth. You can get converted to Roth and use that $12,000 inside Roth to invest in stocks, mutual funds, and grow that money, which is much better than putting money into 529 plans. So that's the first thing which I always recommend
Okay.
to doing that. And then you can do into 529. Of course, 529, you can grow that money, invest that money, and you can use that money for education purpose. That's also a good way of saving money for education.
Okay, one more quick follow-up question onto that, Sanjeev ji, is the limit, like you said, is the backdoor Roth. You have $12,000 per person, right? So is that available after you max out on your 401k, which is pre-tax of $19,500?
Yes. So backdoor Roth has nothing to do with 401k. It's a non-deductible IRA. You have to use that Form
Okay.
8601. So it has nothing to do with 401k. Okay.
Okay. Thank you, Sanjeev ji.
Thank you. Thank you. Really appreciate for the call. And listeners, if you have any questions, you can definitely call the studio number 408-912-5038. 408-912-5038. This is Sanjiv Gupta CPA, who's presenting the show, Dollars and Cents. And my firm, we have 3 offices, Fremont, Sunnyvale, and Pleasanton. And we have one phone number, 510-825-7563. Website is sanjivcpa.com. We have a lot of qualified professionals who not only take care of the tax filing for our clients or new clients, but also take care of their issues that come in, and they're very competent in answering those questions. And they speak different languages, and they're available throughout the year. With that, let's go to the important topic. I want to cover the important topic of the day. I know this, we are running short on time, but just want to cover this wash sales rule. Very important topic. A lot of people, when they look at that broker statement this year, they will be surprised and shocked to see that wash sale is big amount, because they are trading so much and their brokerage companies are doing all things bad. They're not doing calculations in a proper way. So they might be seeing and shocking to see that wash sales disallowed a big number, and when they put in the software, they will be paying taxes. So why this happened? Because the calculations done by the brokerage company are not proper. That happened in prior years. Recall the ESPP issues that happened on the brokerage companies, and they have to fix the cost basis, and all those things happen. The same thing is going up with the wash sales, because people are trading a lot. And remember, wash sales is not related to a specific a specific account is related to an individual, not to an account. Remember that. So you might have different accounts in different companies like 3D Ameritrade, Robinhood, Charles Schwab, this and that. But when it comes to it, so it's all linked to your social security number. So there is an issue of VAS sales. VAS sales related to 30 days prior and before. We have a caller here. Let me take this calls because we are going to the closing minutes. Good evening, Sanjiv Gupta CPA. You have a quick question?
This and that. But when it comes to it, it's all linked
Hello?
to your social security number.
Good evening, Sanjiv Gupta CPA. You have a quick question?
Hello?
Hello? Can you hear
Yes,
me?
sir.
Hello?
I can hear you. I can hear
Yeah,
you.
go ahead. Go ahead, please. Go ahead, please, with your question. We're just having a few minutes for closure.
Yeah, my question is, my current employer does not offer a 401k. So how should I save my taxes? What is the alternative for 401k?
It's a very good question. So if your employer is not providing 401k, you can look into putting money into pre-tax IRA. If your income qualifies, if your income does not qualify, then you can look at your spouse income. If whether spouse has a 401k or not, you can look into spousal IRA. If not, if both of your income are higher, you can look into non-deductible IRA. Does not save taxes today, but save taxes in the later part, and you can invest that money. There's not much tax saving tips that one has for people to save taxes when you're working on W2 with high income, but definitely we can look into that on case by case basis. You can connect with us. Definitely we can look into it and help you with tax filing, tax planning tips as we move forward. Thank you for the call. So as we are wrapping up, so VAS sales, when we are looking at the VAS sales document of the brokerage company, make sure the VAS sales disallowed, VAS sale, what it says is added to the cost of the replacement security that you purchase. If in case your cost basis is higher than your sale price, that means their VAS sales have been included in the cost price. So you cannot double dip. And if you're a trader, not an investor, you can look into mark-to-market accounting method so that you can take the advantage of trading expenses that you can include on your things. So it's this here, one of the reasons why I keep saying is a complex filing, because people have traded in stocks. They have been so busy in doing the trading that they don't realize that when the broker statement, they will go through a nightmare. Their volume is so high and they don't know what to do if they have not kept proper record. So that's why I keep saying it's important that you connect with your accountant, the CPA, the professional who are knowledgeable and available throughout the year, because IRS is way behind in processing the returns, way behind in fact, they are sending notices now of something that happened in the past year. So don't be amazed and shocked when you receive that notice. Just be careful, do proper system, proper tax filing with proper systems. With that, I want to conclude this session. I will be there next Wednesday, same time, 6:30 to 7. And if you want to get ideas and want to understand foreign account reporting, we have this webinar, which is a very important webinar and very famous webinar, March 27, Foreign Bank Account Report, and all about foreign assets and foreign income reporting. Thank you guys all for all listening to me. And I hope that you're keeping safe and you're getting vaccinated. Don't try to avoid being vaccinated. I'm waiting for my vaccine. A lot of people are waiting for vaccine. I've heard somebody saying, I don't want to vaccine because of the so many problems. But then we should think one thing. That vaccine is available. Please get it. We know what is there. Please get it. If you don't want to secure yourself, at least think about the family members and other friends and family which can be impacted by you. With that, thank you guys. Thank you all for listening to me. And I'll meet you next time, next Wednesday, same time, 6:30 p.m. Thank you.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjiv Gupta CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topics, you can get in touch directly with Sanjiv Gupta CPA by calling 510-825